Welcome to Is It Bad for the Economy, the podcast where we explore whether Trump's economic policies are helping, hurting, or just a load of hot air. My name's Kobe Tyree, Democratic strategist trying to figure out how the Democrats can finally get the credit they deserve for outperforming Republicans on the economy. And I'm joined by the anonymous banker Bill, who's doing some great work at a bank you've definitely heard of. It was another big week this week, live economic news, and we had a big State of the Union. Banker Bill, I know you wanted to get started there. Just really quick, I had to say I was expecting, maybe even hoping for Trump to go scorched earth on the Supreme Court on the Republican Party for starting to finally turn against him. But this was a nothing burger. There were some elements of it that I at times was worried might land, but in a 2 hour speech, everything just got lost in the shuffle. There is that one moment Republicans are going to hope matters when Trump asked Democrats to stand up for the fact that the federal government should protect Americans more than they do illegal immigrants. That was almost an hour into the speech. I think of people who weren't watching it professionally, I assume everybody was deep in their phones at that point, if they did even still have it on. The instant response from the pundits to the State of the Union was mixed, mildly positive to neutral. But some of the dial tests that came out, Navigator did a dial test of soft partisans in Arizona. So what that means is they got soft Democrats, independents, and soft Republicans to watch the State of this Union with a little dial where, say, left is bad and right is positive, and the numbers go up and down the screen. We can link to it in the show notes. But the point is, whenever Trump was doing the winning golden age, inflation is down to 1.75%. The economic victory lap, nobody was buying it. You see the Democrat numbers dip a lot. You see the independents dip a decent amount. And at certain times, you even see all three just falling off of a cliff. So as good as we thought this speech was coming out of it, which was like, okay, that was a fine speech, but it's not going to help a sinking ship. It was even worse than that if you looked at the numbers. Will any of that matter come midterm election time? Probably not. But this was not sort of the um, break glass in case of emergency moment that they were certainly hoping for. Banker Bill, I do want to drill into some of the economic numbers. Obviously, that 1.74 record low inflation was a complete joke. But what did you think Trump's best argument was that he made here?
The 600,000 per day barrel per day increase in barrels of oil production. That was true. Energy production overall is up nicely, still below the growth rates of Trump's first presidency. Right now, they're refilling the Strategic Petroleum Reserve. That's up 1.6 million barrels over the last year. That's a good thing. Based on that, I think we can definitively say that we made a great trade in using the SPR a few years ago in the face of rising gas prices. That was a great trade. And the takeaway is, for future reference, if you get hit with something like this again, the answer is you should draw it down probably sooner to about the same amount. The Biden administration was a little short to start pulling on it, political reasons, whatever, right? Like, I mean, but look, from in retrospect, looking back on it, this was a great call. I mean, they are refilling the SPR at a price of what, like dollar 50 below than what Biden let it out at per gallon in terms of regular gasoline. If you look at it on that basis, I think that's great. So that was the best one. Another one was best argument again on energy, jet fuel. Jet fuel is down to $2.30 a gallon. Same as it was in like 2018, 2010. But there's other energy prices that are way up, right? Natural gas is up. We've had a brutal winter in the Midwest and Northeast. Even parts of the South have had to kick their heat on a couple times. So, you can't bullshit people. No one wants to hear 1.7% 3-month trend in inflation. Like, come on. Not a soul is buying that. Terrible.
But so even though we're hearing so much about low oil prices and extraction prices not being worth it, we've got Venezuela. You're saying that it's still build drill baby drill is finding some ways of finding some wins here.
Well, I mean, it's the market. It's competitive. You say drill baby drill. You look at U.S. rig counts. Are more oil rigs coming online? No, not really. So that's just more political fodder. But look, oil prices are down, gas prices are down, liquefied fossil fuels, diesel fuel, jet fuel, gasoline, heating oil. That stuff all matters in terms of your goods and services to your house. You drive to work, you heat your house, whatever. The fact that that's down is excellent. But the total consumer basket not going his way. So, I would have focused more on the energy prices. I wouldn't have talked about the whole consumer basket of inflation. And, that's why he got hit. He's going to have to wear inflation just like the Biden administration did. The tariffs backfired. So we'll get to that.
What was the biggest whopper you think he told during this speech?
Oh, the $18 trillion in investment commitments. They say they're going to get $18 trillion in commitments. U.S. foreign direct investment is $250 billion a year. The high back to 1999 in 1 year was $450 billion. Okay, let's do $450 billion every year for the next 10 years. We're at 4.5 trillion. How are we getting to 18? Whole US economy is 30 trillion. You're getting 18 trillion. Hey, I'll tell you what, man, we get $18 trillion of foreign wealth coming into the United States. Do you know how high inflation is going to be? The competition for goods and services with an influx of quote $18 trillion coming in. You can think about how stupid. You see where I'm going? How stupid that is.
It definitely sounds a case of everybody putting some extra zeros on to make Trump happy, and then Trump putting a couple of extra zeros on to try and make the American people happy. But I think just if you just try and judge this against what's happening in the economy, with the NATO stuff, this makes complete sense. Europe isn't investing in Zoom. They're trying to build their own Zoom. Europe isn't investing in Starlink. They're trying to build their own Starlink now. Uh, if anything, Trump has funded, gotten international investment to start investing in itself again. I think to some extent that's what he was hoping with the defense budgets. But, if you're a military supplier right now, if you're a tech company, that's backfiring on you.
I think that's why you see stock markets outside the US outperforming over the last 12 months. That's it. What you're saying, that's where the money's flowing. They know. What if Europe gets a little pep in its step? I should have some allocation over there. And that's why Europe's outperformed. Now, hey, nobody's saying anything over here because stock market's over here and you're all-time highs and you're always focused on yourself. You're always looking in the mirror because vanity is a drug. But you look you look over the last 15 months, the rest of the world stock markets are outperforming ours.
That's
Capital goes where it's treated best.
that's been a big headline the last couple of weeks. And I think it's worth just reflecting on it for a second because Trump's COVID economy and post-COVID economy, and then the economy that Biden picked up from him, crushed the rest of the world in terms of performance. If you want to be super cynical about it, you could say that Trump made a deal with the devil so that we had higher mortality rates than Europe, but we crushed their economy coming out of this. The bill came due, the inflation spiked. Powell and Biden got it down, soft landing, no recession. We've talked about it a million times. I'll never stop talking about it. But now Trump has kind of started to mess with that a little bit. We've got the aftershocks, we've got the tariffs. Um, and we're seeing it here. So I think now all of a sudden he doesn't have that feather in his cap anymore. Now the economy is in fact doing worse than the rest of the world.
But look, the U.S. economy is doing incredibly well. Like they are going. The tariff is such a self-own, and the way they've implemented, bad idea again, bad idea, poorly executed. There's so many different ways they could have done it. Look, let's move on. The best economic argument I think Trump could have made that was left out was protein prices are down 5.7% over the last year. How do I come up with that? Using the BLS data for the following foods in a supermarket: a pound of ground beef, a pound of chicken breast, pork chops, and 12 large eggs is about $17.75. That is the cheapest it's been since October 2024. It's the cheapest in 18 months to put good quality protein on your table. That's a fact that people can really hear and see. And he's talking about the last 3 months average inflation rate is 1.7%. I mean, you got a pocket. Did he have a pocket protector on when he said that?
He did sneak one little sentence in about beef being down.
That's not true. I mean, the whole basket's down. Don't get me wrong, but that ground beef is not cheaper. That's not true. Eggs are way down, right? But look, the whole basket. That the point is, good quality protein on your table, cheaper, the cheapest it's been in a year and a half. That's great. We want that. I'll give you a bonus one. We talked about the stock market, euro, and the rest of the world is outperforming over the last 12 months. But U.S. stock market is broadening out. Over the last 12 months, smaller public companies are outperforming the large ones. So the smaller companies, the smaller market cap companies are doing better over the last year than the biggest companies. That's great.
Well, we've already touched on it a few times. It's unavoidable, but the other big headline since our last episode was the tariffs, was the fact that the Supreme Court finally overturned these tariffs, a decision that we've been expecting for months.
What took so long? Why'd they keep putting this in their pocket?
Who knows, man? It bears repeating. By every metric, even if you look at the moving goalposts that Trump gave these things, they failed. Manufacturing jobs down, uh, trade deficit for goods record low, and then the deficit. He blew the deficits up so much that these things didn't even put a dent in it. He's doing the new round. He did the 10%. He already upped those to 15%. Legally, those are rock solid, but they are limited, 150 day. Congress could extend it past then. Seems unlikely given some of the recent votes on tariffs. Congress has really soured on them. But nobody knows if you can just turn them back on again after 150 days, basically do them from scratch. So there's a fun constitutional crisis incoming on that. Do you still believe that peak tariffs are over, that inflation is going to keep going down, or are we just basically starting this all up again?
I do. I think we've seen peak tariff. I think the rate will continue to trickle down. It's going to be much higher than it was prior to the inauguration day, right? It was 2%. It's going to be higher, some higher when Trump leaves, whenever that is. Um, but I do think we've seen peak tariff, and I think the trend is pretty good despite recent PPI producer price index release. And I think we might see inflation at 2% sometime second, third quarter, maybe. I another reason I think it's peak is because tariffs are minus 40, 70% unfavorable to 30% favorable. And had it been popular, they would have went through Congress to do it. That was the problem. It was never codified. It was always a wink and a nod the whole time. And then they lost, and they're going to lose again with the Lisa Cook stuff. So again, reasons to be bullish, less uncertainty.
I don't buy that it's less uncertainty. I think that Trump is going to keep finding more and more levers to pull on these tariffs. They're going to be up and down as the courts shut certain things off and force them to go look at other things. But we'll see.
Right,
Hopefully,
but then it's whack-a-mole,
yeah,
right? And then you just get into evasion.
right. But, I think if you want to tell me that there's no way that that chaos is going to be as big as Liberation Day and then the walking back of
Right.
it.
I think each successive ripple is less impactful.
So maybe this is more of an aftershock than a redo, but it does not seem to me like the chaos is going to be subsiding by much. And even if the tariffs dramatically come down or come down on average, the chaos to me seems like it's only coming down marginally.
Maybe, but I think this is the end of taco. It's the end of taco. We're now Trump is a chicken.
Well, and Trump's got nothing left to lose on this stuff as we get closer to the midterms. So, what's the value in chickening out anymore?
All right, maybe. But then what you're saying is he has nothing to lose. It's watch man, I'll do it. And what you think we're going back to Liberation Day? No way.
I for 30 days, for 150 days, yeah, maybe.
So tariffs go from minus 40 to minus 80. I'm saying in terms of favorability. It's only going to get worse. It's only going to get worse.
But when have low favorability numbers ever stopped him before? On inflation, though, there were a couple of things that had me concerned that this might not be the new low on inflation, or that we might not be hitting 2% anytime soon. First, just as I was saying, the chaos. Powell's been saying this entire time. The inflation is being driven by the tariffs, and yet, as we've noted, the tariffs have never been as high as anybody thought they were. So it's that chaos again that's been driving the inflation. So, but we already walked through that. Secondly, the PPI report that you mentioned, it was higher than expected. It looks like inflation might be rising a little bit downstream in the manufacturing processes in the prices of inputs. I've heard some analyses that that's going to take about 3 months to work its way through the system, that we could see some rising prices based off of that inflation. Are you not concerned that that's going to have a big impact once those sort of costs hit our consumer wallets?
No, because the PPI was driven by services costs and rising trade service margins related to import tariffs. So if we take the tariffs off, PPI drops. PPI drops, follow through consumer inflation drops. And the numbers are comped year over year. So this year will definitely be lower than last year.
Again, you just seem too confident that it's going to be easy to keep up with whatever Trump has next on the tariffs. But I
It's
hope you're
not
right.
about it's not about the confidence comes from we have frameworks and playbooks we feel good about that we can execute in a short time in a short window and mitigate the effects.
It seems to me that that's possible on the Fortune 500 side. My gut is telling me that that's going to be a lot harder for medium and small businesses, but you already walked us
Yes,
through how small and medium businesses are doing better than expected. So,
they're forming.
yeah.
Now that doesn't mean they're not going out of business. I didn't look that statistic up. Okay, but business formation, entrepreneurialism, people jumping out and saying, "I want to do something." That's up. That's at all-time highs. That's great. We love to see that. I think the biggest effect on the tariff walkback, Kobe, is going to be the deficit's going to wind up being a lot harder. I shared with you in our outline the deficit tracker. Bessent's out there bragging about how the deficit's lower than it was last year. Hey, that's true. But they are still basically running the same deficit that we ran in 2024, 2022, 2023. Okay. And now, if you wipe out the tariffs, it might be the highest deficit over the last 5 years since, oh, it might wind up being the highest deficit over the last 5 years if you back out the tariffs, right? But that's stimulus. They're running a 6% to GDP deficit. More reason to be bullish. There's all this money coming in. They put in all this money in, and we're still getting inflation down now toward 2%. And the good sectors are going up. The industrials, the materials, the utilities, they're seeing capital inflows. We love that because when they're seeing capital inflows, they're investing in real supply.
You are clearly doing a much, much, much better job of selling this economy than Trump did in his State of the Union. But just two other quick things I saw in a lot of headlines before this PPI report, this producer inflation report came out. Peterson Institute, they had analysis that said that the stockpile games are over. Businesses have done everything they can to keep their current inventory, keeping them going during this crazy chaos moment. That's over. They're about to have to restock big time and pay a heavy price for it. The second argument they made is that some of the labor costs that we have gone up because immigration is down, that those are going to be start to be felt in the economy a little bit. Are those things that you're worried about at all, or still you're just going to tell me we're so strong, things are going to keep going down, we might see 2% next quarter?
Labor costs, yes. I think that is something to be concerned about. I do think in the next several years we might be begging for AI because we will need it to help us be more productive because we may not have the workers we need to maintain our standard of living. Now, live, I'm sharing a chart with you. This chart is manufacturers' total inventories for consumer durable goods. They're saying they've run down inventories. I like Peterson Institute. I read their stuff always to have different perspective stuff in my mind. I don't really see a problem with inventories here. Do you? It always bottoms in December. December 2024 was lower than last year's. They're not running inventories down. Inventories are hanging right in there. So that one I don't buy. Labor costs going up, I buy.
I'm so glad you brought up AI. That gets us to our next topic. There's a think piece going around, folks, and this one's market moving. It's from Citrini Research. Shout out to friend of the pod, Nick Giametti. Not only is it right in line with a lot of the things that he was talking about, although far more dramatic, both in terms of scale and in terms of tone, but he sent this to us early after it came out, so we were quick on this, thanks to him. If you want to learn more about sort of this view that AI is so good that it's going to have these effects on the economy that are so bad for the average worker for cost of life, go back and listen to that episode. It was two episodes ago. It was really good, really phenomenal. We're so grateful to Nick for joining us. But I wanted to bring this one up because it literally moved the market. And just to give folks a little bit of a taste, here's the opening. June 30th, 2028. The unemployment rate printed 10.2% this morning, a 0.3% upside surprise. The market sold off 2% on the number, bringing the cumulative drawdown in the S&P to 38% from its October 2026 highs. Traders have grown numb. 6 months ago, a print like this would have triggered a circuit breaker. 2 years. That's all it took to get from contained and sector specific to an economy that no longer resembles the one any of us grew up in. This quarter's macro memo is our attempt to reconstruct the sequence, a post-mortem on the pre-crisis economy. Very dramatic. Banker Bill, how much of an effect did this really have on the markets?
On Monday, a big effect. By the Friday close, not much of an effect. So who got hit? The same companies that keep getting hit from AI software. So, for example, XSW, so a software ETF on Monday. This dropped Sunday night. The report that Kobe just read to you. XSW was down 4% on Monday.
And that's like the Salesforces of the world.
Yes. Yes. Software, ServiceNow, stuff like that. By the end of the week, it was plus 1.75% for the week. So it erased that entire minus 4% and finished up 1.75%. Right. So it just goes to show you like the money in some of these sectors, the money at the top, on the edges, at the crust, it's soft. It's real weak. It's very happy to rip it out. That's tough. Could you imagine being these CEOs? What if you're one of these older people who've been around for a while and you're like near retirement and like your stock options are now minus 30, 50%? That's crippling, man. Crippling. And
Well,
like every night, some other CEO at another company that's also a tech bro who would supposed to be in your corner is out there to come out and tell all the lemmings, we're taking all AI's going to take all your jobs. It's over for everybody. You might as well just crawl into bed and die. Like, do we need this every day?
I'm so glad to hear that it was basically a wash by the end of the week. But the market impact was so dramatic that Citadel actually went and published this very academic, point by point, well researched retort. Um,
Mm-hmm.
what was their argument? Run us through it very quickly. Why were they just smacking this little think piece down?
Oh, yeah. There's a few things I mentioned. First, it's important to mention this. You mentioned Citadel. CEO is Ken Griffin. I've brought Ken Griffin up several times on this show. He's a Republican. He's been critical of the administration, critical on tariffs, critical on anti-business
Well,
policies, etc.
he's very pro-Trump, big picture, but he goes against Trump when he's supposed to. He's following his own, he's a capitalist following the capitalism rules. I can't call him anti-Trump above board, but he speaks out when I feel like CEOs and Wall Street types should be speaking out. So we do have to give him credit for that.
Fair enough. So I just want to make sure you know the connection. All right. So they probably now this is their house view. An economist there. I should give him credit, but I don't know the person's name. Um, said the following: You don't know what's going to happen. You have no idea the effects of AI. As it comes into play, those effects are nonlinear, meaning there's peaks, valleys. You go forward, you go backward, 5 steps forward, 4 steps back, 15 steps forward, 10 steps back. Business formation, entrepreneurialism, off the charts. People want to do stuff. Productivity shocks are supply shocks. So what they're saying is, hey, if you bring on AI, that is going to make some downstream industry or workers more productive. And as long as we are directing that supply to the right arenas, either up the value chain or in real production, these doomsday scenarios aren't going to pan out. And they use history as a guide. So am I buying it? We don't know what jobs are going to be disrupted. There's different layers of confidence. Software has eliminated many jobs. Bookkeeper jobs, data entry, translators, receptionists, and over time what we got are software developers. How many software developers were there in 1960? I tried to look it up. There were none. They were called programmers. There were 10,000 of them. They were 0.01% of the labor force. Software developers are now 1% of the US labor force, 1.5 million jobs. So AI could be like the internal combustion engine. It destroyed the market for stable hands, for people who work at a horse farm, created the job for mechanics. I think the biggest risk, except taking it all, and I love reading this stuff. It's very interesting. The biggest risk is not the elimination of jobs, but deteriorating living standards. And what that is, you take a $160,000 household and you make that an $80,000 household. And in the data, that'll show up as low unemployment, but high U6, or unemployment steady, rising U6, quality of job deteriorating. That's the scariest thing. But you don't know. I mean, what do you think? You don't know how this is going to pan out.
To your example about mechanics and stable hands, I think another great example there are the Teamsters. They thought they were screwed when the car came out. There's a reason there are horses on their logo. They adapted. And I feel extremely, extremely conflicted about this negative take again, which I think Nick has shared a much more reasonable version of on our episode. Because on the one hand, I love the fact that finally people in Wall Street, in the tech world, in the business world are coming out and saying, hey, this huge revolution that we're building, this huge project that we're building, it's got some unintended consequences. And we need to be ready for those and we need to plan for them ahead of time. And we actively need to be thinking through the worst case scenario instead of just hoping for the best. That feels like a radical, rhetorical, ethical, philosophical departure from the last 20 years. I'm so happy to finally be hearing that. But on the other hand, there are so many things that have to happen between now and this picture that this think piece was projecting. And if you look at the trajectory that things like self-driving cars, which are finally starting to come into their own, maybe. None of that stuff's been linear. None of that stuff's been predictable. And I think part of what Citadel was saying in a lot of different ways was essentially like, markets are good at this. If there's one thing that markets are good at, it's figuring out major adjustments like these. That's why we have markets in the first place. One last topic I want to touch on just briefly. Everybody is talking, of course, about the Paramount deal. Netflix has dropped out. WB is moving forward. It looks like with the blessing of the Trump administration. Um, I want to talk about the politics of it for a second, but first, economically, is this a good buy for Paramount? I mean, the last two people that have bought Warner Brothers have come to regret it.
I think Paramount has to do something. They're in the state they're currently in is either acquire something and get bigger or be acquired. WB is a good fit for them. They've got good assets that they could bolt on to Paramount, better monetize the movie studios there. But now that they're buying it, and they've talked themselves into a much higher price. It comes with a lot of debt, and with it, a whole lot of execution risk on the people that are working there and trying to make this happen. What was your view politically? That's what I'm interested in because I don't know how much it actually mattered.
Well, before we get into that, I think that that point is well taken. I mean, Paramount's got to do great things with WB in order to make money from them. In terms of how they're running CBS, that doesn't seem to be going great. In terms of how they manage the Colbert situation, that doesn't seem to be going great. And if you look at WB, and look, I am not somebody who follows the economics of the movie industry. I do take a casual interest in it. Last year, out of nowhere, Warner Brothers had an amazing 2025. The big hits that they came out with were Sinners, Weapons, Minecraft movie, F1, and Superman. Now, F1 was a movie they made with Apple. Maybe that would or would not or would get made with Paramount at the helm moving forward. Um, but Sinners, this very woke horror movie that gave all the rights to the African American director, that allowed him to come out with all these different film formats and the IMAXs and him explaining exactly what the different film was. I don't think an auteur is going to be given that kind of a leash when a corporate overlord is looking for a quick return. One Battle for Another, a left-leaning movie that was expected to lose money, was expected to be a prestige money that got PTA, this Oscar bait director, got them some Oscar prestige. I don't know if it ended up making money, but it certainly made a lot more money than folks were expecting it to. Weapons, a comedian got to make a cheap horror movie and it blew up. Who knows if that happens? And then finally, Superman, and explicitly, yeah, sure, that was a franchise tentpole, but again, it had this liberal bent to it that was a huge part of it outperforming what people thought. Wokeness and taking gambles on expensive artists is why WB was such a price to be had in 2025. And the way that Paramount has been running CBS, the way they've been managing Colbert, I don't see them making those same kind of decisions in the entertainment division.
All right, so one thing about one battle after another. That had $175-ish million budget. Total box office as of today, February 2027, looks like 209 million.
Oh, yeah, there you go.
All I would say is if they're not willing to make movies that make profits, this isn't going to work.
No, but that's what I'm trying to say, Banker Bill. Nobody thought this movie was going to make money when it was
Oh,
announced.
okay, okay, and it did. So that yeah. I
That's what
mean, look,
like because PTA is one of these Oscar bait directors. Somebody gave him almost this is the middle class movie that doesn't get made anymore, right? where you give a blue chip director too much money and they actually come back with a hit as opposed to just some art movie that won some Oscars but nobody sees.
Yeah, so look, so Warner Brothers has some good IP, right? Institutional IP, and with it some very good knowledge base. So obviously it's appetizing. From the Netflix perspective, I thought this was like a masterclass from them. Netflix's market cap is like 400 billion. Paramount is like 15 billion. So you got to understand the scale of size and company here. Netflix sees them. They see Paramount kind of needs these WB assets. Definitely needs them more than Netflix needs them. Netflix is like, hey, I would love to have those assets too for some of the reasons you just highlighted. I'll get in, I'll bid, and if I can get them at my price, I'd love to have them. Not only will I have them, I probably kill off Paramount or make them be acquired one way or the other. So they start bidding it up, saying, hey, we'd love to get our price. They don't. Paramount's ultimately willing to go a little bit higher. So now Netflix is left smiling. They're in the same operational position they were before this. And now they see a competitor with a boatload of debt on their new balance sheet and a very, very high degree of execution risk. Netflix comes out looking great.
And I think a lot of cynics were expecting that to be where Netflix would end up on this deal the whole time.
I don't agree that it was a ruse from the beginning.
I
I,
think it was
I do believe that if Netflix could have got the assets at a price at their price, they would have bought them. Right. But they did obviously they knew everybody knows that Warner Brothers or I'm sorry, Paramount needed the Warner Brothers assets much more than Netflix did, and therefore obviously willing to pay a higher price.
well, politically, legally, I do think that we have to touch on this for a second because last in 2024, it would have been unthinkable that the White House would have given a corporate acquisition its blessing. That was supposed to be exclusively under the purview of the DOJ. There was supposed to be no political influence on those kinds of legal decisions. And we've just seen this so much from Trump. He's nationalizing companies, he's picking winners and losers with the tariffs, with some other stuff,
The equity investments,
crypto. And now,
crypto, Trump coin minus 98%.
hey, Trump media down a ton, they announced.
They're gonna. Did you see? No, I'm not gonna say. It. They're gonna tuck the company in and make it a new public company. You
It's
don't do that when your company's doing well, by the way.
unless
But hey,
you're Elon Musk. I saw that the entire Grok team, senior Grok architect team, just resigned because all their stock got diluted so much in the last roll up with SpaceX.
brutal.
But it just is this socialist? Isn't this like in the negative way the Republicans use the word to talk about people like Maduro, to talk about Soviet Russia? Isn't the head of the head of the country just managing the economy like it's his own personal sandbox? Like, aren't we just in what Reagan was warning us about the entire time?
Yeah. What do you want me to say? Like, yes, but for a number of people, they're happy with it because it's their guy. Like that's it. That's it. And I hope we can get back to an era where the business case and the facts actually do matter. Right? And I'm not just saying that about Republicans. That goes for Democrats too. Democrats, please, through the election, if you're going to talk about things like Warner Brothers or Paramount and whether they should buy things or not, make sure you tuck in with it the fact that you need more housing, you need more energy, and you need better healthcare. Those are the issues. And don't get wrapped up on whether some guy and a couple of his buddies want to overpay for Warner Brothers assets. That would be that's my ask. Don't go down the same road. Just like this administration is going down the road you went down over inflation. Don't go down their road of trying to hyper manage everything. Please. Don't take it the wrong way.
I think should be a core part of the Democrats' economic platform in 2026 in the midterms.
I'm gonna love this.
No tax on tips.
But on the whole tip or just like up to a certain level?
Why don't we do it for real?
I already have no taxes on tip because every tip I give is a gift, non-taxable.
Wow, look at you. I'm sure that you travel and don't drive as well. Um, thank you so much for
From
listening.
your lips to God's ears.
Shout out to all our sovereign citizen listeners. Thank you so much for listening to another episode of Is It Bad for the Economy or watching it. You can find us on YouTube, Substack, Apple Podcasts, Spotify Podcasts. If you'd like to come on, if you'd like to ask a question, just send us an email at isitbadfortheeconomy@gmail.com. We're going to have a lot more guests this year, and we've got a really exciting one lined up for next year. An affordable housing developer who knows New York City inside and out and happens to be one of my favorite people in the entire world. Tiger said he's going to be joining us.
He's
So
coming
get
on our next episode, not next year, like Kobe just said. Just so you guys know.
excuse me, next episode. And Banker Bill has been saving a lot of New York City housing rants. And I have been saying we don't know anything about New York City housing, but he kept coming back with them, so I finally found an expert who did. And I'm really curious
I can't wait.
to see which side he lands on. Anyway, we'll see you in 2 weeks with that discussion. Thank you so much for joining us. We'll see you soon.